Hey everyone, welcome back to the channel. The markets has been on a roller coaster ride. So all of us have seen the bloodbath on the market. So it's on a lower low trend. And all of us would be anticipating when is the next bull run and when is the right time to enter into the market. So first thing first, never time the market. That's the rule of thumb. Never time the market. Whenever you have surplus funds, just try invest into the dips. Whenever you see a correction in the market, just try investing onto those dips. So do not try to time the market and try investing only at this right time. You don't wait for the market to go further down because it never happens. You will never be able to touch the last point of the market's downtrend. So the Nifty was like always on a downtrend last week, and we had a very good support point there. We have a ray of hope at 22,500. So that is a key range. If it goes below that, then it's definitely going to be like a real worse scenario. But if you see today's scenario, the market is like again trying to pull back. And if this is trying to close over this value of 22,900, then that's definitely going to be a bullish momentum. That's how it's going to be working up. So let's decode how is the market going to perform after this, because we've seen a great fall from here. Almost from 26,000 we have come almost all the way to 22,800, 900-ish. So this 22,900 acts as a very good support value for the market. And if the market is able to break out this, then definitely we could see a bullish momentum coming up in the market. So we've got a huge list of things lined up. And today, to start with, the first thing, we are going to have the US Fed results that's going to be announced today. So that's one of the key things to observe and wait how the market is going to react to that news. Then we've got the union budget, which has been scheduled for the 1st of February. So that is again a very important thing to be noted into. So that could be giving up some boost towards your fiscal deficits and your infrastructure spending and your tax reformation. There are some discussions happening about tax reformation too. So that's going to be a key point on your market's progress. Then we've got your Delhi elections, which has been planned for the 5th of February. That's again a key point to keep into consideration, because that will give us a chance for all the policies, whatever has been proposed, their continuity, and how the market is going to react to that. So that's one of the key things to observe. Then we've got your RBI policy that is going to be on the 7th of February. So these are some of the key things that are lined up on this first week of February. And we need to say how this is going to be giving a boost towards the growth of the market. Then we've got your Delhi results, election results on the 8th of February. So we got 5 key important things which are lined up for this week. And to start with, we've got your Fed results, which is going to be published today. And markets may swing. So that's the thing, key thing to observe. Market may swing, and the person who is going to be put in the market is definitely going to be the winner here. Though as we all know, patience is the key here. Just try to stay put and be calm. And whenever you have that surplus money, try to invest into the market during all these dips. So all these volatility is temporary. And as a strategic investor, what you need to do is just try investing on all these dips. So let's go to the critical chart here. So if you see here, 22,900 is going to be the very important thing. Yesterday, there was in fact a pullback. So that was your close value. And yesterday, there was a pullback which happened in the first session in the morning. And later again in the afternoons, what happened was there was a panic selling again happening. Everyone started cutting off their positions. Again, the chart went to this doji. Then what happened is today the market has been tremendously bullish. It's over 150 points almost now. So it's 0.73% up, and you could see that the market is in a bullish trend. So if it is going to close up this value, then we can definitely see a market breaking up, and it is trying to go here. So we could have something this chart went almost all the way till 26,000. Then it came to a dip of this value here. And now it is trying to break up this value and go above this. And if it is going to, again going to take the trajectory of this, could be somewhere between here to at least 27,500-ish. So this is the target that is expected. So we may never know when it will take or how much time it will take. But as per my anticipation, this could be happening very shortly before the next financial year because of all these announcements that are going to be lined up. So we'll definitely expect somewhere between 27,500 range could be the easiest target for us. At least we'll be definitely trying to break up this value. And do note, this is not any financial advice. I'm not any financial advisor by any means. So this is just a small prediction that I am trying to make. So do your due diligence and try to discuss with your financial advisor before making any investments into the stock market. And if you could see here that these could be some of the trajectory values of this. and this will take up some time to break out this 26,200, the all-time high value of your Nifty, and then like we'll try to cross over this value. So these are the things that has been like, which has been taught to us, or like which we have seen in the past, because the history always repeats. That's how the market like also moves. And if you happen to see the trajectory of your Nifty over the past 20 years time, you could see that this was your first crash. So we call this is your 1992 crash, or we could call them as your Harshad Mehta crash. So that almost took like 2 years to recover. So the Harshad Mehta crash took 2 years to recover, and after which in 94 the market again bounced back. It again went to a greater highs. Then the market was again soaring high. Again it went up all the way high, and we again got up another downtrend, which was during year 2000. So we call them as your dot-com crisis. So again the market went high. Again there was a dot-com crisis. The market was again down. So that took again like through 3 years to recover. Again the market was going to greater heights, and it went all the way till 2008, where we've got a global crisis, the Lehman Brothers crisis. So after which market fell very sharply. There was a deep correction in the market. So everyone thought like that's going to be the end of the stock market, and it's all like ruin, and nobody will be able to make money through the market. Again, like market showed us greater results. Again, after that corrections, it again took some more years. So during this phase, you could see here that the market fell in 2008 crisis, and it took almost few years for the market to recover, almost like 6 years to be precise. And after which from 2009, if you happen to see here, this again, there was a bull trend which happened here. From here till all the way till 2017, you could see here that the market went up all the till 2017 here. The market till this values, you will be able to see that market was on its bullish trend. So this bullish channel was like completely taking a place. You could see here that this was like a green channel for you, and this went all the way here. I'm just drawing these lines roughly to just show you the channel. I'm not exactly taking up the values here. So this was like a golden period during your market move. So after 2017, there was again a crash. 2016, in fact, there was a small dip which happened because of your demonetization. So demonetization happened here, but that didn't stop the market. Again, it gave up a greater run till 2017. So this 2008 to 2017 is going to be the golden period in your stock market, I would say. That was a very good bullish channel. That's when everyone started knowing about markets, and everyone, a huge above registrations started coming up. There was a huge registration which was happening in NSDL and CDSL accounts, and a lot of people started investing into the stock markets. And then like after that happened the so-called COVID drop down. Again the market went on a deeper correction. This is again same like your Lehman Brothers. So this time it didn't go all the way till 60% correction like your Lehman correction. This time it was more like a 40% down. So this 40% down again went to made the market almost half the price. So the market was almost around 12,000. This went to 7,000's range. And after which everyone again presumed this could be the end of the market. But the market didn't stop there. So that showed us a greater results here. So this is one of the again biggest bull run in the market. So from 2020, the market showed up greater results here, and you could see here this is how it's been performing. And this is like 2024 where we saw the market's all-time high value. And then like again from there we see a small dipping here, and that's how it is like touching up this value, your 20-day moving average or like whatever it is. So that's how the market is like performing on this, and we still see here that the ray of hope is still there on 22,900, and we are definitely seeing that the market could bounce back from here and again show up a greater bull run on this and extending all the way till 27,500 values. So all these crises, what it teaches us that this is all going to be a birth of a comeback. So whenever the market falls, it again takes up a rally from there, again goes to a greater high, breaking its all-time high values, making them higher highs in the market. So do not get panicked or petrified by all these short-term corrections in the market, because all these, that's how a market behaves. Market is not something that will give you like a 10% or 5% increase month after month. So market is something which always gives you a higher value, then goes for a correction, again goes to a higher value. That's how the market behaves. You need to retain patience in the market and just stay put into the market. So with the RBI's the new budget policy coming up, or the elections coming up in this, there could be a lot of turmoil happening in the market. There could be again some small corrections which could happen here at this place. But I see a very good this green channel that is like forming up here. So if this is going to be like really good, then that's definitely going to kick off from here, and we could see a greater thing. There could be a small correction silent here which would happen, but again in the next 2-3 months span, like how we saw this small correction which happened here, dropped. Like this was like one of the time when everyone was like saying up that the market could bounce back from here. but that didn't happen. This is more like a dead ball bounce. So the market fell down. Again, it came to this the support zone. From here, it is making up the bullish channel and is definitely expected to grow to this place. So it may take like about 4-5 months of time maximum, and definitely we are going to break this all-time high value. And if you like this video, do share it with your friends and do smack that like button too, so that this video could get spread to a lot of people around you. And do leave your comments below on what do you or where do you see Nifty progressing towards. How do you see the market in the next 1-2 years, and see like how it's going to be like performing, and how we could be like getting benefited from this market. As I say always, try to do your due diligence and try to do your own understanding of the market. This is a small understanding of myself, and which I'm just trying to put it as a video. And do discuss with your financial person before making any financial decisions. I'll see you up in the next video. Until then, stay tuned. Thank you.